Hello and welcome to this session for the EOW Virtual Conference on Fraud and Weatherization. Can it happen to you?
Hi, I'm Lisa Ritter. I'm the Weatherization Program Manager at the Northwest Michigan Community Action Agency.
And my name is Ray Judy, and I am the MyTech Director, which is the Weatherization Training Center in Michigan.
In this session, we will be defining fraud, waste, and abuse. We will explain what it's like to have to deal with the aftermath of fraud, and we will define internal controls and what it means to assign responsibility.
So when we look at the definition of fraud, waste, and abuse, we've got those listed there on the screen. But we look at fraud, and it's an intentional deception that violates a law or a public trust for personal benefit and the benefit of others. We look at waste, and it's behavior involving the extravagant, careless, or needless use of government funds, property, and or personnel. And then thirdly, on the abuse, the behavior involving the use of government funds or property that a prudent person would not consider reasonable and necessary business practice given the facts and circumstances. So just a few things to take away from those definitions, and some things you'll hear us reference a little bit as we go throughout the session today. But an intentional deception. So when we look at fraud, we're looking at that idea of someone is doing this on purpose. They have the forethought and they are putting those thoughts into actions to commit that fraud. Waste, when you look at some of those other terms there with extravagant, careless, certainly focus in on government funds, and we will highlight that many times throughout this presentation as well. And then lastly, the abuse, the idea of a prudent person. That means that if you are a prudent person, some of the things we're going to talk about are going to seem strange to you, or you might even wonder why someone would do that. We're going to try to answer some of those questions as we go throughout the presentation today. So as we have done our research on this topic, and some of the observations that we found from that is that we really think there are three risk areas, and that is people, money, and opportunity. So we need people because we have work to do, and we obviously need people to do that work. We need the money because the money is what pays for that work to be done. And then there's the opportunity, and that opportunity is what we'll focus in on a lot. And then that's the idea of the opportunity is you have the opportunity to do what's right with those funds, or you may have the opportunity to maybe abuse those funds. So the second bullet point there, to some degree, the only thing that we can limit or attempt to control is opportunity. People will do what people will do to some extent, but we can control their opportunity to be able to fraud or to misuse those funds. So we want to focus in on that as well as we move forward. The next bullet point there is just Ray's reasoning. Again, this is a result of the research in pulling this session and other sessions together. But here's my thought. You either have had, do now, or will hire in the future a person willing to commit fraud if given the proper set of circumstances and the opportunity to do so. And I just want you to keep that thought in the back of your mind as we go throughout our session today, and as we relate real life circumstances that go along with this session, and come back to that and think about triggers and think about circumstances that people often find themselves in that might lead them to this capability of committing fraud. And I think Lisa's going to take the last bullet point there for us.
Trust but verify. You'll hear us mention this phrase quite a bit in this session. It comes down to setting up a set of internal controls that eliminate the need to have to try and trust somebody. Verification is where the internal controls makes things possible.
So I just added a few headlines and that deal with fraud and particularly federal funds. But when you look at the dates of those bullet points, June of 2020, that's very, very recent. And I just wanted to add these to the point to understand that fraud is something that is occurring and ongoing at all times, that there are always those people, given their circumstances, given that opportunity that we've already mentioned, that will take advantage of that if that comes their way. And so just a couple examples that we have listed there. Auto loan fraud scheme receives additional prison time. So kind of keep that term prison time in the back of your mind also. Middleton used car dealer sentenced to 27 months in federal prison for defrauding lenders. There's another connection to be made there, that federal dollars and the abuse or fraud related to that time is usually spent in federal prison. So different circumstances as well. And then the last one there, 12 months in federal prison for stealing over $450,000 from the Social Security benefits. So, you look at that number there, $450,000, that's a large amount of money. And so we see some greed involved in these types of things. But we're gonna look at some characteristics here of the type of people that commit fraud, and hopefully that'll help us be on the lookout in our own organizations and better recognize red flags. But here's a quote from a fraudster, and I've come to grow fond of that term fraudster because it just really kind of paints that picture in my mind of someone that would do this. But it says, obviously people lie when they're trying to hide something. I did it too. So, if you have someone in your organization that's committing fraud, they're probably not going to come up to you and say, well, guess how much money I stole from you this month. So, you're going to have other ways of determining that, and certainly other ways of finding out if your organization is safe from this type of activity. But I just found that quote very interesting as we start to consider the type of people that commit fraud. So we're gonna spend a few slides here to just look at that. But let's share some thoughts here as we get ready to move forward. So I'll do the first couple of bullet points, and then Lisa and I are just going to kind of tag team this slide a little bit. But just some introductory thoughts. Many of the examples in this session are real life from the past couple of years, and I'm going to let Lisa speak a little bit closer to that, and it'll bring a lot of more meaning into this session as we move forward.
Yeah, and that second bullet point there, the details and the repercussions were actually lived out by our weatherization staff, our agency staff at NMCAA, and mainly me, myself, my supervisor, our controller, and our executive director.
And the influence of the actions that Lisa just related reached up to the grantee level as well, because they're ultimately responsible for those funds. They're the funding source for the Department of Energy, for LIHEAP, and so they have responsibility in following up with that type of circumstance. But I want you to also focus in on the last bullet point. It says, please note how far-reaching the actions of one dishonest person can go. You're going to notice some of the traits that we talk about, that oftentimes people who perpetrate fraud act alone, but the effects of that they don't only affect that one person. It goes very deep, and so the seriousness of this issue will be brought to light by that last bullet point and how far-reaching the actions of one dishonest person can go. So let's notice some characteristics of these individuals. So one of the first ones we'll look at is what they often refer to as a white-collar criminal. So just look at some of those bullet points and start thinking about people that maybe you've worked at in other places, those things that's made you a little curious or not sleep well at night. Let's look at some of those things. The white-collar criminal is someone with an impeccable reputation. Someone that's willing to obviously abuse their professional position, above average level of education and creativity. The creativity piece is one that, at least for me, as I found out more about this situation, that really kind of jumped off the page a little bit as far as the thought that went into perpetrating that fraud and the ways that you have to try to kind of get around the system. So there is some creativeness to that. The criminal energy is oftentimes not discernible. And notice that it can come from any area of expertise, independent of sector. And it's usually someone that's been working for the for the company more than 5 years. So start thinking a little bit about that familiarity. if there's weaknesses in internal controls or if there aren't internal controls in place. This is someone that if they have this desire to take opportunity of that, they're looking for loopholes, they're looking for areas where there are weaknesses that they can take advantage of. And so we're gonna dive in a little bit more to the characteristics. This idea that it radiates trust. It really stood out to me in doing the research on these types of individuals that this was something that was noted to be a fraudster characteristic, that they radiate trust. But in this example that Lisa and I are both familiar with, it played true. It was something that was a part of knowing this individual. But notice the parts that are highlighted. So, you know, the part of this characteristic was it enables the fraudsters to win the trust and even empathy of those around them with playful ease. So, you know, this is going to be someone that's likable. This is going to be someone that, at least to some point, is believable and even radiates that trust. There to the right, the other part that is highlighted. I thought this employee was a person of complete integrity. Of all people, he was the one I would have believed least likely of committing such an offense. So if they are able to radiate that trust, they kind of fly below the radar screen. If you're looking at fraud risk in your organization, you probably don't start by looking at your most exemplary employees. And so I think Lisa has a little bit to add to this part as well, from the closeness of living this part.
Or you wouldn't suspect someone who's been there for several years. That's where that trust but verify really comes into play, that we will talk about quite a bit. I mean, he was my supervisor and in a position of authority, this person that we are referring to in this session. So in no way did I think that he was capable of doing this crime.
So let's look a little bit deeper. The white collar criminal, there's a little bit more about them, but they even kind of break this up even into some additional categories, if you will. So you see there to the left, the pinstripe predator, the narcissist, the gullible victim. And so what these descriptions do is give you a little bit of an insight. Number one, that it happens often enough that people have done research to try to understand how these individuals think and how they go about the processes of committing fraud. And that's how they've learned what some of the triggers are for individuals to get them to this point in their lives. And it's going to be interesting to note that as we look at that, to notice that someone may be setting, you know, wherever right now with no thoughts of ever committing fraud. And maybe 5 years from now, their life circumstances change to the point that those triggers become so strong and that opportunity avails itself, and they now find themselves doing something that they would have never dreamed before in their life that they would be a part of. But, you know, again, the white collar criminal is one that's under normal circumstances. This profile of a fraudster is an exemplary employee who follows rules to the letter and would never hurt anybody. Again, that radiating that trust and building that trust with those that they work with and those that perhaps even oversee them. But let's start noticing some of the characteristics as we go deeper. But as we look at these next few slides, I think what you will find with some fraudsters is that they will continue to grow to the point that they fit into a lot of these different definitions. That they may start out as a simple white collar criminal, if that's the proper way of saying that. But then I think that sometimes the longer they go and the more that they get away with things, they kind of progress. So the pinstripe predator is the one that consciously seeks and patiently awaits opportunities to commit fraud. Again, that forethought, that putting a plan in action and then waiting for the right time to put those actions in place. But then it comes, his belligerent attitude makes him an opponent who needs to be taken seriously. With playful ease, he manipulates his superiors, public accountants, and any regulatory bodies who have little experience in fraud. A couple of takeaways there. Again, they're learning. They've worked there long enough to learn the system. They know where there may be weaknesses. But they are also looking at those areas maybe where there's little experience in fraud. So if you're one of those entities watching this session where you think it'll never happen to you, you're the type of person that fraudsters are looking at to take advantage of. So just really kind of let that, if you will, let that set in a little bit. When we look at the narcissist, it has an exaggerated opinion of himself, is arrogant, and is not open to criticism. He commits fraud because he is convinced he is so uniquely clever that he'll never get caught. And that's why I think that sometimes individuals will cross over some of these descriptions, because I think at the peak of when people are doing this is where they are as far as being a narcissist, that they get to this point where they feel like they will not be caught, and they are so smart or they're so good at it that no one's going to figure it out. So thinking about that from that avenue, I think this is the one that people grow into. Look at that last part of the sentence there. For such a person, the chase to win admiration is exciting and never ending. And so to them, they're accomplishing something by committing this fraud. So, you know, there's a lot of insight into these individuals' minds. And then the last one we'll look at as far as a specific is a gullible victim. And these individuals regard themselves as a social creature. In the eyes of the fraudster, he is being exploited by profiteers. So often offenders of this type do not actively search for opportunities to commit fraud, but to maintain a relationship or revenge themselves for a disappointment, they're willing to commit the crimes. So think of those that, you know, they knew that they were the best person for that promotion and they didn't get it. Now the company owes them because they were overlooked for that promotion. They were shorted or cheated somehow, and now they're gonna get that back. You didn't give me the position, but I'm gonna get it back by committing fraud. So I hope that even, you know, already in this session that you're seeing the need to start the wheels turning. Do I have good internal controls in place? So we're gonna talk about that just a little bit.
I think from our perspective, we can actually see characteristics from all types that we just mentioned of this individual that we talk about in the session.
Absolutely. It really started coming together and looking at these things. And there's a certain picture that comes to mind now when I look at this. So let's look at a few percentages here. 90% of fraudsters are first-time offenders with clean records. That goes back to that idea of it being an impeccable employee or someone that radiates trust. They've not done this before in many cases, so you don't have that past history that becomes a flag. 40 to 60% of businesses never recover any fraud-related losses. What Lisa's going to share with you later in this session to the depth of the damage that one person can cause. I know I keep asking you to keep a lot of things in the back of your mind as we move forward, but make a note of this, that 40 to 60% of businesses never recover any fraud-related losses. That's going to be really important when Lisa shares more about what her agency has gone through.
Yeah, and we've actually talked about this quite a bit at our agency, the fact that we will likely not recover any of our losses from this crime. And we think that, any restitution that we receive when he's released from prison will never cover the amount that was stolen. And I mean, it hurts, and it's going to hurt for several years to come, but that's just how it is.
And the last point on this slide, statistics show that the average occupational case of fraud is active for 18 months before it's detected. So if you think of someone that, even if they start out small, if they become confident and if they become good at what they're doing and they were talented perhaps at what they're doing and they go undetected, how much money is it possible for them to fraudulently steal in a year and a half time?
Yep, and it was almost exactly 18 months that the fraud was occurring at our agency. It's amazing how these statistics are lining up almost exactly with our experience.
So it shows that these numbers aren't manufactured or made up. they're based on statistics, and this is a real life account that fits those statistics. That's a great point. So we can continue there, and we'll probably both talk a little on this slide as well. But look at some of the scary thoughts here as far as that allows people to be successful at time with fraud. Many leaders believe they feel it in their gut if something were amiss. And if that's your internal control for your organization, is that you just feel like as a leader of that organization, you're going to feel it in your gut. You're going to have a bad feeling if something's not right. That's probably not a strong enough internal control to keep a fraudster from touching your organization.
Yeah, that's not going to happen. That's where the trust comes in, and it should not be based on trust. Trust but verify, Ray. It's never something you're going to feel. You are not going to feel it just walking down the hallway. It's not something that you can just detect maybe in a conversation with the person that you suspect, because they're really good at hiding it. They think they are awesome at what they do, and they think they're smarter, and they can hide it very well.
Here's another one that's scary, especially in the world of weatherization, that many nonprofits believe they're immune to fraud because they have strong core values. I guess one thing that we should stipulate here is that core values and internal controls are not the same thing. Core values is not the same thing as we've been mentioning in trust and verify. You can establish those core values, but to make the assumption that everyone in your organization will continually and will always abide by those core values or even share those core values is not enough to protect you from fraud happening in your organization.
That's right. And then in community action, we pride ourselves in the fact that we help people. We are in the business of helping people. And we hire employees who truly care about helping people. We have these strong core values, but that alone is not going to protect you from that one person that wants to do harm.
And again, keep in mind the amount of damage that one person that wants to do harm, how far reaching it can be. So let's notice some of the triggers there. I've mentioned that a couple of times, but really focus in on these as well. So there on the left of the screen, possible fraudulent act triggers of white collar criminals. Notice it says possible. We're not profiling anyone here, but we're giving you things that, at least in your mind, should be possible red flags. So some of what's been found through research is personal debt, medical bills, a spouse losing a job, an ailing parent moving in, drug or alcohol use or abuse, gambling, and inability to control spending. So, this is some of the things that will lead people down this road that will be a trigger for certain people committing fraud. Now, you tie that back to the opportunity that we've been talking about. This person may have not been in any of these situations 5 years ago. Their lives have changed. And if it comes to the place where the opportunity and the trigger become strong enough and they come to a point where they meet, then your organization at that point is at risk. So when we get into talking about internal controls, this is where that's going to be extremely important. Notice some of the red flags of a white collar criminal. We've talked about that description a little bit early on. Living beyond their means, financial difficulties, wheeler-dealer attitude. I can't say that without thinking of a used car salesman, but yet in that first, one of the examples that we used was related to used car sales. Unusually close association with a vendor or a customer, control issues, unwilling to share duties, and divorce and family issues. The above part of that, the organization that did this research found that approximately 79% of perpetrators exhibited at least one of these 6 red flags during their employment where fraud was committed. So you're not looking in your organization for somebody that hits all 6. I think that's really important to take away from this. Any one of those triggers could be enough if someone's given the proper opportunity to take advantage of the organization.
And what's really interesting is the individual, or the criminal, I should say. I sometimes call them something else, but the person that we are referring to quite a bit in this session actually has 5 out of the 6 of these red flags. So it's very interesting.
So the next slide brings up something that at least in my opinion, so take that for what it's worth, but is something that we're going to need to be on the lookout for in our organizations. And that is, how much is COVID-19 going to affect fraud happening within organizations? Now, we just went over what some of the red flags and some of the triggers are. And so when you think of COVID-19, let's just notice some stress points that I think accompany COVID-19. Loss of income. How many people spent a few months without work? Might have been the first time they were ever like that. Might have been the first time they ever experienced that. Working remotely. Difficulty in following established procedures. Opens up that door of opportunity. Less active oversight. Increased family issues. We have had families that are used to going their separate ways each and every day. And now those families have been together in the house for long periods of time. There could be issues that arise as a result of that. There could be more family issues as a result of loss of income that perhaps were not present when COVID first began. Internal controls more difficult to utilize and enforce working remote. And Lisa's actually had a little bit of experience and example with that as well.
Yeah, I mean, there's a lot of reasons for concern as we were all sent home and we are all working remotely. Our agency staff started working remotely mid-March, and we're actually still pretty much at home. Our office is not open just yet. So there's a lot of reasons why things might fall apart a little bit. Working remotely, if you are a supervisor, how are you supervising your staff? How are you making sure that they are actually doing their job at home while they're also walking the dog and taking care of the kids and doing laundry and dishes? And it's hard to figure out how to track their activities and make sure that they are being productive and putting in the hours that they need to put in, and being justified in paying them for that time. There is less active oversight. I mean, it's difficult to stay in touch with your staff when you're working remotely. You can set up all the Teams meetings and Zoom meetings you want, but it's not the same as working together in the office. Another thing that is really worrisome is the internal controls that you set up for working at the office is even more difficult to maintain when everybody's working at home. When we transition to the home office or dining room table or basement or wherever we are setting up, there wasn't just the movement of staff to the remote office, it's also the movement of stuff. So computers came home, printers were moved home, files and other materials were moved home. So that the idea of internal controls and keeping track of things kind of goes out the window. And then just the processes, the everyday the everyday processes are that much harder to perform as well. You know, how do you get that signature that you need on that form in order to move forward with that process? So there's a lot of things that COVID, a lot of stoppers that COVID has thrown into our process that make it very difficult and very stressful.
And that doesn't even mention the programs that are receiving additional money to help those in need. Again, opportunity, knowing where the weaknesses are. So great examples. So here's another quote from a fraudster. So it says, you can write the best manuals and draw up the best work processes, But if something is urgent and in emergencies, things never run to plan. So we just went through a slide detailing COVID. Do you think, does the word urgent and emergency come to mind when you hear COVID-19? So I think they tie together, but obviously this quote was from an individual long before COVID was a thing. So you just really need to get as much from the mind of these individuals as you can if you're going to try to evaluate your agency's strength and weaknesses, which really needs to be done on a regular and recurring basis. We'll look at a few of the percentages, if you will, as we continue to look at characteristics on this slide. Just a couple that kind of stand out to me. You can certainly read all of those on your own, but 55% worked alone in committing their scheme. Again, think of the things that we've covered, the building the trust. I was a little skeptical when I first seen this percentage, but having done the research and then looking at this particular circumstance, seems to be probably a pretty good percentage of the ones that work alone. 52% were between the ages of 31 and 45. Please don't look at your internal controls and look at a statistic like that and think that, well, that's the probable age, because anyone in or outside of that age bracket is capable of committing that fraud. 2/3 were male. And so I guess the other one that stands out to me that I'll mention is that 44% were known to be living beyond their means. That to me is one that research and knowing this individual both combined really stands out to me.
Yeah, for me too. And I think in hindsight, both of us look at that statistic and we think, wow, why didn't we see that? Why didn't we realize that based on his salary, how was he able to afford all of the stuff that he had, all of the tools and the toys and the boat and the Jeep and the truck and the ski equipment and the fishing gear? How is that even possible? It never occurred to me.
So that's where the trust but verify comes in. It's like if something doesn't seem right, there may be a good possibility that it's not. And trust and verify gets you to that point. So just a great example of why that's so important. So this next slide really jumps out at me as well. This just demonstrates a little bit, if you will, the percentages of the way that fraudsters are caught. And so if you start at the top of that screen or the top of this particular slide, the greatest percentage of the ways that fraudsters are caught are by tips from other people. Let that sink in a little bit. Have you ever had anybody from your organization come and share something with you of something just didn't seem right, didn't smell right? How did you respond to that? Did you look into it? That may have been your tip that something was going on. We really need to drive home the fact that they may be good enough at what they do that a general audit may not find it. There are audit firms that specialize in forensic audits, and that the reason for that is that they specialize in finding the way that people steal money from organizations. Some of your normal audit accountants will not go that deep into things to be able to find out where those problems are. I think that percentage of it being by a tip is very telling in the way that we combat fraud in our organizations.
So internal controls, we've mentioned that a lot so far. Internal control is a process for assuring achievement of an organization's objectives in operational effectiveness and efficiency, reliable financial reporting, and compliance with laws, regulations, and policies. So an internal control is like a map that shows you the flow of your procedure in your organization's objectives for those 3 bullet points. it's a map that has to be followed to get from beginning to end of each process and who's responsible for each part of the process. It's kind of a broad idea, it's a broad concept, but it involves everything that controls risks to your organization. So it will expose the risks, it will show you where the holes are in your procedures and how you can establish something to prevent that risk from being there. So internal controls are the mechanisms, rules, and procedures implemented by an agency to ensure the integrity of financial and accounting information, promote accountability, and prevent fraud. So, and like I said before, it's kind of like a map that details the responsibilities of all staff that are involved in the rules and procedures, and it helps you get, like I said, from one point to the end and who is responsible for each step along the way. And it shows other people outside of your agency or outside of your program, this is how we do things. And this is the proper way to do things to ensure that there are no risks, that we are not vulnerable at any point along this roadmap.
And so when you think of internal controls, I don't want you to walk away from this session thinking that it's an easy thing to implement, that it's an easy thing to write up, because this slide is just a demonstration of how many different types of control, and this is not an all-inclusive list, but the number of different controls that a sound organization would need. You have financial controls, IT controls, which you could almost do a whole session on the risk of IT vulnerabilities, project controls for each department, each different source of funding. You know, there's so many different areas where things can develop issues. The more programs your organization runs, the more opportunity there is for those internal controls to fail. Safety controls, compliance, risk. Do you know what the risks are facing your organization? And is that looked at very often? Human resources control, operational control, and obviously quality control in everything that the organization does. So I just don't want anyone walking away from this session thinking that you're going to block off an hour and a half someday in your schedule and you're going to develop all the internal controls that your organization needs. So just please keep that in mind as you look at that list.
So the control environment is the agency's attitude toward internal controls necessary for effective internal control, because even the best designed systems can be thwarted if management overrides the controls that are in place. So trust but verify. Again, we are saying that phrase. So the verify is your internal control. It makes it possible to prevent just relying on trust.
And I'm gonna stress that bottom bullet point. Trust that overrides the internal control is the same as not having the internal control in place. I think Lisa said that many times, and certainly we want that point. We want you to take that point away from this session. So we look at the different types of financial controls, financial statements, policies, segregations of duties, audit trail, disbursement policies, reconciliation of the banking statement, and the general ledger. And I think Lisa may have a little bit more to add on at least the segregation of duties, but you know, these are all different parts of your internal controls.
Yeah, segregation of duties. So just separating, so you have a process and it has several different steps. You can't have just one person in charge of all these steps that are sometimes conflicting duties. So you can't have one person set it up and the same person check that process and verify that it's being done correctly. It has to be a multi-person process, at least two people. So you can, it's like checks and balances. You have to have someone who's checking on someone else. It cannot be just one person.
And again, continuing to look at those financial controls, and this goes in a little bit deeper into that separation of duties, but just notice a few of those bullet points: the vendor maintenance and posting invoices. So the separation, as Lisa was talking about, from creating vendors and the way that those payments and things are posted, purchase orders and approvals. Who is requesting the payment and who is able to approve that payment. I'm not going to make the assumption that it goes without saying that shouldn't be the same person. So this is one that is particularly important. Journal entry and approvals. Can someone pick up the journal entry and does it make sense? And who gets to approve if things are changed or moved around? Who in the organization? What is the process of the organization in order for those changes to happen? And what is the approval process for those things to be moved? But it just gives you kind of an idea of how deep and well thought out this type of separation of duties needs to be.
Yeah, and unfortunately at our agency in the weatherization program, we did not have separation of duties set up. We did not have a set of internal controls to speak of. We had the same person, the criminal, who was assigning the funding source to pay for something. He would create the request for the payment and he would receive the payment. So one person was responsible for all those steps, and that's a recipe for disaster. So our weatherization program had to set up our own set of internal controls as a result of this crime. And we looked at a few different areas to focus on. First, we took a look at our inventory. We previously were a crew-based program, and we've since switched to contractors. So we did have quite a bit of inventory. We had tools and materials left over. We had a trailer full of stuff. So look at your program. What do you have? Who maintains the list of what you have? And that can be anything from tools and materials to the computers and printers in the office. Think about all the items that might be tempting to take. And you need to maintain a list of those items. So who maintains the list? And then who verifies and reconciles that list to make sure that everything is there, or if something is removed or something is purchased, who keeps track of that stuff? And how often is it performed? Is it just done like whenever you think of it, or is it done quarterly? That has to be set in your internal controls. So this can be a huge issue for crew-based agencies because it will be a lot of work. Another area we looked at was paying contractor invoices and material invoices. So again, like I said, there needs to be a separation of duties in the payment request, and then the approval, and then the actual getting the payment or sending the payment to the contractor. We looked at purchasing and procurement. So who's in charge of the credit card? Who has a gas card? Who has the Home Depot card? Who has access to it? Where is it kept? Who looks at those receipts? Who gets the invoices and looks to make sure that everything was purchased does in fact need to be purchased and is going into this house. We also looked at mileage and per diem as an internal control. Mileage and per diem has to be approved by a manager every single time. And then for travel, providing an actual agenda from the conference or the meeting that was attended, that is required. And in fact, for mileage now, our agency requires a beginning address and an ending address so that we can verify the exact mileage and there won't be any extra mileage anywhere. Then we also thought we ought to put in an internal control for the weatherization database that we use. At our agency, we use FaxPro. And I know there's other programs out there that are used by weatherization. So we wanted to spell out exactly who was responsible for each part, from intake to job closing, at final closeout. So who inputs the information? What is put in there? When does this occur? And who does the verification that the materials that were used on that job were actually used at that job? Can you match what's in FaxPro to the invoice that you have in your hand? So it was quite a process. It was an exercise in really taking a deep look at the way we do things, and how we can do things better, and how we can do things in a safe way that doesn't leave us vulnerable to areas where things could go wrong, or things could go missing, or things could be questioned by a monitor or an auditor or something like that. So there may be obstacles to implementing your internal controls. It's not a fun thing to talk about with your staff, like, this is how we're going to do it, and there's all these extra steps that I'm going to make you do now. It's going to be hard, especially if you have high staff turnover. So you've already explained the internal control process, and now you've got a new employee that you have to explain that to all over again. So that might be tough to do if you have a high turnover rate at your agency in your program. Or you may have a small program or at a small agency where there's not enough staff for that separation of duties. So that may be difficult to figure that process out, and you may even have to reach outside of your program to get that additional person to distribute that duty. And it does take a lot of time, and you're not going to get it right the first time. There's going to probably be several revisions along the way that you'll have to work on and get input on. It will take some time to figure it out, because you have to decide who does what, and it's hard to sit there and think about how you do things and keeping track, like writing down how you do things that you do every day. But sometimes it's automatic, and really thinking about writing it down in a document can be difficult. And you may have some staff that will doubt the effectiveness of it and think that this is foolish. Why are we doing this? We don't need this. We've always done this the same way and nothing has ever happened. So this is pointless. This fraud is not going to happen to us. But I think you are wrong. And if you want, my email is at the end of this presentation. Feel free to email me and I'll explain the possibility for vulnerability to fraud. Again, who will enforce it? So who's going to oversee your internal controls? Is it someone outside of your program who has an eye on things, who can review what is happening in your program? And then again, the inventory, like I said before, it takes time to maintain that, but it is so very important. So there are benefits of internal controls. There are many benefits. Defining roles and responsibilities is something that can be a very good thing that comes from this process. Improving efficiency in certain operations. It can make you better at what you do. Protection from fraud. Establishing integrity. Ensuring compliance with law or policy. The Weatherization program has a lot of policy that we have to follow, and it changes a lot. So once you get an updated policy, you may have to update your internal controls document as well and inform your staff. But it controls the opportunity for things to go bad. It controls any chance that someone may take advantage of of your areas of risk.
So as we continue to think through some of these things, we have some questions for you to consider. So as we bring these questions up, just take the time, if you will, to think about your agency or your organization and where you are. So the first question is, where do you think your agency is most vulnerable? When you look at risk factors, when you look at some of the things that we've already brought up, when you look at your staff individually, where do you think you are the most vulnerable for fraud or theft to take place? And so here's the other one. We've just went over the definition and looking at internal controls. Do you have internal controls in place at your agency? So think about those procedures, think about your policies, think about the way things are processed and accomplished. So if you answered yes to that last question, are they being followed? And, I think that the tendency will be with a lot of people that you're going to automatically answer yes to, yes, we have internal controls. So the same, it may have the same tendency on that second question to say the same thing. Are they being followed? The tendency may be say yes. But if you're saying yes to that question, how do you know? How do you know that the internal controls that you have established are being followed and protecting your agency or your organization? And so then here comes the real question then, how are you testing your internal controls? I think this is the one that if you either don't know or if you are not testing your internal controls, you probably really don't have a good grasp on how safe your organization is or is not.
You really have to sort of think like a criminal to do the testing of your internal controls.
Absolutely. And this is right in line with the trust and verify that we've mentioned so many times so far. But let's look at it this way. Then, if you are testing your internal controls, then the next question needs to be, how strong are they? So if you've tested them and you've tried to maybe circumvent one step of the process, were you able to go ahead and make that payment? Were you able to go ahead and cut that check? If the answer to that is yes, then your internal controls aren't very strong.
Yeah, if you can easily go around something and make it happen, then you got to rewrite your internal controls.
That's part of any honest evaluation of your organization, is that if there are issues there, they need to be addressed. I think that's why many organizations are afraid to look at their internal controls because of the work that's involved with it. And for some reason, they'd rather go on the assumption that it won't happen to them rather than taking the time and the energy and the effort to ensure that they have strong internal controls in place. So we want to take a little bit of a look here at the relationship between the weatherization manager and the controller.
So what are your thoughts on this relationship? What is your current relationship with your controller or your financial director? Do you have regular communication with the business office or the finance department on the status of your grant? Do you know how much money you have left in your grant when you get towards the end of the program year? Conversations like this need to be happening very regularly. The communication needs to be there. Sharing of information is a necessity, honest, open, and often. The honesty, if you have a question, you don't know what that is that you're looking at on your financial statement from the business office, you need to ask them, what is this charge that I see on here? I've never seen this before. Can you explain this to me? So those questions can turn into really good discussions, and you can learn, both of you can learn more about the program and how it functions. Federal dollars, Ray.
I was going to take this bullet point because those of you, if you've heard me present very many times at all on weatherization, you've heard me stress the fact that federal dollars make this a very huge responsibility in the way that this program is managed. And any program that's dealing with federal dollars, it's a huge deal. And so I've got that in all caps and explanation points. But when you're talking internal controls, when we're talking about fraud, we're talking about theft, it's very important to realize it's a very serious matter when it is dealing with federal dollars. There are high expectations of the way that that money is used. And if you are the administrator of those funds, you put yourself in a place of responsibility to ensure that that's being done properly.
Yep. So sharing and discussing the average cost per job in terms of production is so important for your controller to understand and know what that means. What is ACPU? And don't just go throwing around acronyms. You have to have a discussion about the average cost per unit and how that affects the spending of your grants. How are WAP funds used? How is DOE money different from LIHEAP money? And how is that completely different from your EO money, your flexible energy optimization funds? How does that come into play? So you and your financial department need to be on the same page and understand exactly how the funding can be used and how it cannot be used.
And one of the issues that this next bullet point brings up that we ran into after the time of ARA and the last round of stimulus funds was, we ramped up, we had extra people working, we were using more office space in our organizations. And then when ARA went away and the money were drastically reduced, the question is, how much space do you pay for, how much rent are you paying on the space that you use in your building? Shortly after ARA, we found that people were paying for space that was now being used by somebody else. So understanding exactly what it is that you are paying for, and that's where that communication with your controller and with your business office or your finance department, whatever you choose to call that, that's why that's so important. How many phone lines are you paying for? If most of your staff is now using cell phones, they may not even have desk phones anymore. How many lines coming into your main office building are you paying for out of your budget? To Lisa's point, that's why you want to know what those charges are. How much of the share am I paying? And how is that share being determined? What is your portion of the internet expense for the agency? Are you the smallest office area in the agency, but yet you're paying a sizable amount of that internet expense? Is it based on usage? How is that broken out? And how is those funds being shared? How are they? It's the same with utility expenses. How are they being shared or broken down across the programs? And then lastly, how do you know YHEAP and DOE jobs are handled correctly? And certainly in a role like Lisa's, where she is the weatherization program manager, doesn't have the luxury of assuming that finance understands the different rules, the different regulations, and that they're not only federal dollars, but they're federal dollars from different funding sources. And so we'll go ahead and continue a little bit on these thoughts being continued. There I go again. I'm gonna put the federal dollars up there again, just because it is that important. And that's the reason for this entire session. And the examples that we are using in this session is that happened with federal dollars. So this idea that somebody wouldn't do that with federal dollars really needs to leave all of our thought processes. So when we look at your organization's rules and regulations, what approvals are needed? Does the weatherization manager have a role in approving those expenses, and what is that role? Again, the open and thorough communication is crucial. You just simply cannot properly manage this program and be in a controlling role of the opportunity for bad things to happen if that communication is not frequent and completely open. And so we're both going to hit on this point, and that's why it's highlighted. But if something seems off, ask questions. Think back to that slide on the highest percentages of the ways that fraud is found, and it's by tips. If something seems off, you may be that tip that gets people to looking into the situation and stops it before it gets any worse. And then, are changes ever made after the WAP manager has approved the expenses? You know, if you're in charge of the finances and where that money goes from that program, does somebody have the opportunity or have they been awarded the authority to make changes to that after it leaves your hands? And if that happens, when do you find out that those changes were made? And again, you know, we're going to stress this many times, but regular and open discussions between WAP and the Weatherization Assistance Program Office and the finance department. It just simply has to happen.
And whether you're a new manager or you've been a manager for 20 years, you still need to have that regular communication with your controller.
Absolutely. That need never goes away. And if we ever get to the point of being so comfortable that we don't think we need to talk to one another, our internal controls are probably not working really well. So, and then the last point there, regular, clear reporting on all expenses. It should not be a mystery or a scavenger hunt to find out how the money is being spent and what the money is being spent on. So that reporting needs to be very clear to everyone that's involved with those programs.
We're going to take a closer look at the types of fraud that are common in nonprofits in particular, and we will focus on examples from the weatherization program so you can kind of picture it in your head how this might happen. So there's several types of fraud that commonly occur. Some of these you might already be familiar with. It might be something you heard about, or you saw it on the news, or you briefly considered taking advantage of it yourself. Or it might be something at your own agency that has bothered you for a really long time, that this potential is just sitting there waiting for a bad employee to take advantage of it. So there's holes and gaps in the way we run our programs that create some of these opportunities for fraud. And the first kind is check fraud. So that is stealing blank checks and writing them to yourself, duplicating an actual check using a computer software to make a passable version of the actual check, endorsing a check that is not made out to you, forging someone's name. And some of the red flags from the weatherization program examples might be, let's say the weatherization manager has access to where the checks are stored. So you may need to ask yourself, are the checks under lock and key? Who has access to those? Or is the weatherization manager requesting to deliver the check directly to the vendor? And then they could possibly alter the amount of the check. And then, they have to accept a check for overpayment from that vendor directly to them. So there's lots of ways that check fraud could happen. So you need to really make sure who has access to those checks and how is that process controlled, who issues the checks, and who has access to them in your business office. Skimming and stealing cash. So this is taking a little of that larger amount for yourself. This can be checks or donations that come into the agency that a bad employee takes a portion of, cashing the checks and maybe only recording a part of the deposit, or not making the deposit at all and keeping the money if it's a cash donation. A process needs to be in place for accepting and recording donations of all kinds at your agency, and you need to have the distribution of duties so that at least two people are involved in that process. Misusing donations. So this is similar to skimming, where funds or sometimes things are kept by a bad employee. And this can happen if donations are given directly to one person. Let's say the weatherization manager, for example. Let's say a donation of 12 boxes of batteries are donated, but only 10 get recorded. So what happened to those other 2 boxes of batteries? Another example is a used table saw and some other really nice tools are donated to the weatherization program for use by the crew. But there was a really beautiful table saw that was recorded as junk and was recommended to be thrown away by the weatherization manager. But in reality, that went home with the manager. So that, again, that's where at least a 2-person process needs to be in place. Misusing restricted funds. As you know, our programs are run with funding that is highly regulated, and responsible spending of these funds is our top priority. Some examples of this might be reporting inaccurate data, fraudulent statements to funders, misclassifying expenses, or financial statement mistakes, or that is fraud. An example of that might be from the weatherization program might be inflating the number of completions so that production numbers match monthly spending amounts, or maybe adding more measures to the work order after the job is completed. Maybe increasing the labor costs for some jobs, or increasing other miscellaneous costs here and there to inflate the numbers. Credit card abuse. I think this one happens a lot. This is, the manager has access to the card or the Home Depot card. It's in their wallet all the time. So the possibility of fraud happening, the temptation for this to happen is always there, to buy something for yourself along with all the materials for the job that day. And a red flag for this type of fraud might be the Home Depot receipt might have something labeled tools or office instead of an actual job number. So how do you track that? Where did that stuff go? So that would be a red flag. And expense fraud. This might not be an issue for a while since we're doing more virtual meetings and there's really no reason to travel to conferences like this one. But exaggerating personal expenses is fraud. It may not seem like fraud because you worked hard and you traveled so far and you're just going to add a little extra mileage to your expense sheet, but that's fraud. You can't report 50 miles when you only traveled 5 miles to get there. So doubling the mileage to or from an inspection is an example from the weatherization program. Maybe fabricating an in-progress inspection to receive that extra mileage, or adding extra days to meetings or conferences to get that extra per diem amount. Kickbacks. So this is unlawful payments to the employee, let's say the weatherization manager, for favorable treatment or more frequent selection of contractors. In other words, bribery. So these are bonus payments maybe to the weatherization manager for choosing one contractor more often over another one. So a red flag for this might be, this contract over here is receiving 75% of your jobs, and this one over here really doesn't get that many. So that would definitely be something to look at in your program. Ghost employees. This is payments to terminated staff or payment for hours that have never been worked. So an example would be continuing paychecks to a crew member in the weatherization program who was fired, but they're still getting paid. Or maybe changing the account number to deposit into a different account, maybe the weatherization manager's account. or creating a fake crew member and cashing the paychecks yourself, or maybe inflating the number of hours worked by not even requesting the time off. If no one's checking on it, you can get away with that. If there's no daily log or check-in to verify where you were on this day or this day, you can see how some of this could happen. And a shell company. So this one is my favorite, Ray. So billing schemes are very common. It's a common form of embezzlement in the nonprofit sector. It can be done if no one at your agency is checking a few basic things. So a shell company is a fake company. It does not exist. So let's say the weatherization manager created this fake supply company for weatherization type materials. So there are fake invoices created with items that appear to be kind of weatherization related so that they could pass for real purchases. So your business office gets it and they think, well, that sounds weatherization-y. So yeah, well, that's okay. Using the fake vendor to invoice for multiple identical measures, using real and false job numbers, or even jobs that have been deferred that can or cannot be connected to actual jobs. So things to look for to prevent this: does the company have a federal tax ID number? Did they provide you with a W-9? What is the address of the company? Do they have an address? Or is it just a P.O. box? Or does it maybe match up with the address of one of your employees? Does it have a website? What is the name of the company? A shell company name will usually have a familiar sounding name similar to an existing legitimate company, and will sometimes just have initials for their company name. This makes it more difficult to search for it online. And there will likely be several other companies with the same acronym or initials that the fraudster created.
You know, if you haven't made this connection yet, this should be part of your internal controls. That before a company is able to do work with you, this part of the internal controls is you go through this process. So just again, in thinking about how sound and how strong your organization is, you know, do you have anything in place to help with this type of circumstance?
So the shell company type of fraud I mentioned is exactly what happened at our agency. So I can personally attest to the probability of it happening. Our business office did not have the strong internal controls that they needed to detect this and prevent this fraud from happening. So those red flags, they were not recognized. The effect it has had on our agency and staff is really too much to cover in this session, but I'll tell you more about it and some of the red flags we should have picked up on. And I want you to think about Ray's definition of a fraudster and how the opportunity was definitely there in this situation. So the fraudster was my former supervisor. He was the weatherization manager. He lived alone and lived a lavish lifestyle. His online shopping habit sent packages to the office daily, and I mean daily. Several packages per week arrived at the office for him. He had access to grant funds and other flexible funding sources. He had access to the agency credit card and the gas card and the Home Depot card. He did create a shell company, and it was called E=MC². He gave no W-9 to our business office. He used his home address as the vendor address. He picked up the actual checks. Instead of using direct deposit, they were just handed right to him. He created bogus invoices with actual and fake job numbers and deferred jobs. The invoices had complicated weatherization sounding items and often multiples of these items. So they just went right through the business office undetected. He intentionally mislabeled items to increase spending of certain areas of the grant. He created the check requests himself. He typed my name on all of them to make it look like they were created by me, and he authorized each one. And he did all of this during a staff changeover in the business office because he was familiar enough with the processes to know that that was his opportunity to do something that would easily be overlooked by the staff, the newer staff in those positions. The majority of the money was embezzled through the shell company he created, but there were also tools and equipment we discovered had been purchased and were not in our inventory. He used the agency credit card and Home Depot card to purchase items he disguised as tools or supplies. The impact on our agency was pretty great. The person we made reference to earlier stole approximately $350,000 in federal funds from our agency. The embezzlement, as you can imagine, had a huge impact on our agency financially. Not only did we have to reimburse the state of Michigan for the stolen DOE and LIHEAP funds, but we also incurred substantial legal fees from handling and responding to the crisis. And our crime insurance premium rose from $256 a year to $7,300 a year. Our agency also suffered other financial losses and damage to our reputation. One funder even downgraded our agency, resulting in decreased funding, and we became a high-risk entity to our auditors. We now face increased scrutiny for years to come as a result of the crime. We face negative press from local and downstate media and countless phone calls from community members and clients asking about the crime. The crime was discovered almost immediately after he left the agency to work elsewhere within the Weatherization network. Items that we knew had been purchased, we couldn't find them. After some digging and turning up multiple receipts, we compiled a list of missing tools and equipment totaling over $15,000. Soon after that, the shell company was discovered, and because we realized he used his home address for the company address, that connection was made. So my first year as program manager was spent gathering evidence and trying to figure out how to do my job without asking his advice, because he did offer to be my mentor and come back and train me once in a while. So avoiding him at meetings and conferences where he was very well respected was a very hard thing to do. I have lots more gray hairs than I did 2 years ago. I was interviewed by the U.S. Attorney General's office and the IRS twice. And I worked with them in the state DHHS office to get everything they needed for the case. The IRS led the investigation. We worked with the local sheriff's department to retrieve the stolen tools and equipment. And the FBI seized the rest of his larger purchases, like the boat, and I believe the Jeep and the truck. Altogether, it took 16 months from the time the crime was discovered and reported to his sentencing in federal court. It took another 2 months for him to actually go to prison, and that's where he is now. In my victim impact statement that I read in federal court last December, I stressed the fact that he not only stole from the agency, but he stole from our clients. And these were clients that he met face to face when he did their QCIs. And he still took money that was meant for them. Our hope is that you will take a good look at your agency's internal controls and examine who does what within your own program. Setting up a system of internal controls is a good way to eliminate gaps in oversight and will significantly reduce the number of opportunities available to potential fraudsters. It's worth the time and a few extra steps in your daily routine to use internal controls. It must be in a document, and it must be enforced, and it must be routinely checked. Our agency had already begun working on our strategic plan when this crime happened, and as a result, it strengthened the final product that you see on this slide. We created our cornerstones of culture to establish a set of core values we could all live and work by, and this is posted throughout the agency as a reminder of how strong we can be when we support each other in these ways.
And just one other thought as we look at what this agency has gone through and the work that Lisa and her staff and other staff at the agency has had to go through as a result of this, I think the one thing that another takeaway for you to ask yourself is, as you look at your organization, as you examine its strength, vulnerabilities, and all those different types of things, would your agency be able to have withstood if this theft and this fraud had happened to your organization? Would it have been able to withstand the loss, the repayment, and all the situations that Lisa shared for you, which is just a touch of the surface with what they've been through as a result of this? This is the seriousness of the situation, is that if your organization is not strong enough to withstand that, someone committing fraud against it, are you able to withstand that? And we hope that you will take that consideration away from the presentation as well. We want to thank you for viewing this session. I appreciate we both appreciate the opportunity to be able to share this information with you. I guess my biggest hope is that we will put the internal controls in place, and we will be on top of things enough that we will not have clients losing the opportunity of the benefits of this program because the opportunity for fraud existed.
And I hope that you at least learned something from our presentation, from my experience, from what we had to go through. It was difficult, and I wouldn't want you to go through it. Thank you for viewing the session, and I hope you enjoy the rest of the conference.
And we have listed our email addresses at the end of this presentation. Please do not hesitate if you have questions or want more information or even just need to talk to someone. Please don't hesitate to reach out. Again, thank you for viewing this session.
Thank you.